The Fed has started laying out its exit strategy plan, but as yesterday's Fed minutes show, there's still disagreement about when to actually withdraw. Bob McTeer is a fellow at the National Center for Policy Analysis and a former Fed governor. CNBC's senior economics reporter Steve Leisman is here with comments from the New York Federal Reserve President William Dudley. And CNBC.com's Jeff Cox has been working on how Wall Street is playing it. Mr. McTeer, overnight, and indeed yesterday afternoon, world equity markets rallied because although they're discussing an equity strategy, the view seemed to be that they're in no hurry to tighten once QE2 ends at the end of next month. Do you think that's a correct analysis of where we stand?
Yes, I do. I think it's correct in that tightening probably isn't imminent. And number two, I think it's been so well advertised that it's probably built in anyway.
Steve, what has Bill Dudley added to the conversation?
Okay, so here's the way you read Bill Dudley. He says, we're growing now and the weakness is temporary. Translation, I don't see any need for additional QE. And then add the other two aspects, which is I see inflation expectations still under control. And three, that the economy is going to, it's still a lot of slack in the economy. Those two things add up to I'm in no hurry to tighten. So no need to do more, no need to do less. On track for what is the consensus on the board right now, Simon, which is that they end QE2 in June and continue the reinvestment policy. I think this summer the discussions are going to get really interesting.
Mr. McTeer, what about the pressure coming from the commodities arena? The Fed so far doesn't seem to feel, as Steve just said, expectations of inflation are under control, and yet wheat is up 17% this week alone. It's a major foodstuff in the world, and you know the story on the others, copper, et cetera.
Yes, well, these commodities are determined on the world market. Also, there's good economic foundation for Mr. Bernanke's view that these are transitory. Milton Friedman in 1967 convinced the world that what the inflation rate the public expects generally is what they get, and they're still expecting inflation to be lower in the future than it is right now. So I think they are well anchored. I think a lot of the commodities are in a bubble. Maybe the agricultural commodities have some more fundamentals behind them.
A bubble, okay.
I think gold and silver, for example, has clearly been a bubble, and I would, if I had any money, I'd sell them and buy the dollar.
Okay, buy the dollar? That would be bold, given the atmosphere out there around the greenback these days.
Just for perspective, we got to remember that the dollar has been weakening relative to its safe haven status during the crisis. It's about the same level it was before the crisis. It's long run weak because we've got this chronic deficit in our balance of trade, but it hasn't really gone down much since before the crisis.
Jeff, the roaring success that the Fed has undeniably had is that it's boosted the equity markets, and we're now 11-12% from the record high. From the people that you talk to on the market, is there a believing that the Fed is underwriting those asset prices in addition to the dual mandates?
Well, look, Simon, I don't think it matters whether you call this QE3, QE2.5, QE light. The market's expectations are planted very firmly in the notion that the Fed's not going anywhere. Just to go back to what Mr. McTeer said, I talked to some commodities people who are very in touch with the agricultural commodities, who say that the direction for prices is up. When you look at the weather, when you look at the demand picture and some of the other dynamics that are in play, I don't see, at least as far as what we're going to be paying at the grocery store, that type of inflation, no way.
If what Jeff is saying is right, I believe that will bring the Fed back in earlier than expected. The expectation here from the Fed is that these commodity prices are transitory and that they work their way through the system. And I would suggest it would be very difficult for other prices other than commodities to withstand another run-up in prices in addition to the one they've already withstood and done so quite well so far.
Yeah, well, interestingly enough, I think from the equity side that investors are looking for sector rotation. They're looking for some uncertainty as we go through the summer. Once we get past that uncertainty, probably another rally in the equity markets going into the end of the year.
Gentlemen, we must leave it there. Thank you all for your analysis. Thank you.